Good morning. It's Friday, the 17th of October, and this is Govindraj Ethiraj, broadcasting and streaming weekdays, usually from Mumbai, India's financial capital, but presently still in transit. So, we have a short capsule and a longish conversation on semiconductors and artificial intelligence, which I found most educative and insightful, and I think you will too. So, stay tuned right till the end, and let me jump right in.
This is the Core Report with Govindraj Ethiraj.
The markets jump. The preconditions for some sort of economic boost are already in place, but the markets seem to have picked up on that right now. Bear in mind that nothing has changed on the US-India trade tariff war. If anything, matters are as tense as they were earlier, with India just rebutting a claim by US President Donald Trump that Prime Minister Narendra Modi had promised he would stop buying Russian oil. One reason why we have been slapped with an additional 25% tariff on top of the 25% tariff for exports into the United States. Now, we, of course, don't know much about what discussions are going on at the back, but this is the public face of it, and Trump tends to go all out in public. On the other hand, foreign institutional investor buying has stepped up. India's benchmark indices have risen to more than 3-month highs, thanks to stocks like Nestle and Axis Bank and strong earnings and earnings outlook, including from financials. Domestic inflows also continue to be strong, though gold and silver are continuing to attract attention. On Thursday, the Sensex and Nifty were both up, gaining for the second consecutive session. And at close, the Sensex was up 862 points to 83,467. And the Nifty 50 was up 261 points to 25,585. The top stocks that gained were M&M, Kotak Mahindra Bank, Axis Bank, as we mentioned, Titan. This is on the Bombay Stock Exchange. In the broader markets, the Nifty Mid Cap 100 and Small Cap 100 were up 0.46 and 0.24%, respectively, according to Business Standard. The rupee touched a 1-month high on Thursday. There is some link between the rupee's strength and the market's current bullishness. One reason the rupee touched a high or has been on a stronger wicket is because of Reserve Bank of India intervention, particularly in day before session. The rupee rose to a peak of 87 rupees 70 paise in early trading before closing at 87 rupees 82 paise, up 0.3% for the day, according to Reuters. And finally, as expected, gold prices hit a record high as investors continue to move towards safe haven assets. It's still above $4,200 per ounce. And now gold is up 61% year to date. Tech results are in. Infosys reported a 13% increase in consolidated net profits, hitting about 7,300 crores for the second quarter of the financial year compared to about 6,500 crores last quarter, that's last year. The company also declared an interim dividend of 23 rupees per share, and during the quarter under review, revenue from operations increased about 8.6% to 44,490 crores according to an exchange filing. Attrition rates were up for July-September to about 14.3% from about 12.9% year on year. Infosys management said that their proactive investments over the last 3 years in embracing an AI-first culture within Infosys have ensured that their people are reskilled to thrive in a human plus AI workplace. And Wipro also reported stronger than expected second quarter revenue on Thursday, driven by strong growth in Asia and America's communication businesses, and has also forecast revenue for the current quarter to be in line with some analyst estimates, according to Reuters, which added that India's fourth largest IT services company, that's Wipro, saw a 1.8% rise year on year in consolidated revenue to about 2,269 crore rupees. And Wipro also reported stronger than expected second quarter revenue driven by strong growth in Asia and America's communication businesses, and forecast revenue for the current quarter to be in line with some analysts' estimate. Remember, forecast and outlook is what most analysts are looking for when it comes to IT services companies. Reuters also added that India's fourth largest IT services company posted a 1.8% rise year on year in consolidated revenue to about 22,000 crore rupees, or about 2.5 billion for the July to September quarter. And Wipro expects a 0.5% decline to 1.5% revenue growth for the third quarter. Semiconductors and AI. Of course, we are in an AI bubble. Former Intel CEO Pat Gelsinger said on CNBC earlier this week. An article in the New York Times by Jared Bernstein, chair of President Joe Biden's Council of Economic Advisors from 2023 to 2025, and Ryan Cummings, who served the council as an economist from 2021 to 2023, said that it was time to call the third bubble of our century the AI bubble. They all point to how investment in artificial intelligence has been so huge, with venture capitalists investing nearly $200 billion in this sector this year alone. Additionally, data center investment has tripled since 2022. And together, these investments are driving growth across the entire US economy, pumping up the stock market, and generating increasingly eye-popping valuations of the technology firms driving the AI revolution, according to that New York Times article. On the other hand, Mario Morales of technology research firm IDC, who you will hear more from in a minute, argues that enterprises globally are expected to spend $1.5 trillion in IT over the next 3 to 4 years as they race to build their own AI infrastructure, all of which will give the semiconductor industry a big push, which I felt was a good moment to go deeper into semiconductors themselves, the heart of the AI revolution, and understand how they stack up from the most ordinary ones to the sophisticated ones, and they're all traded almost like arms and ammunition now. So who is making them, where, and what does supply and demand look like globally in the near future? I spoke to Mario Morales, GVP and General Manager, Semiconductors and Enabling Technologies at IDC, and I asked him first about where he saw the tech revolution powered by semiconductors heading. This is a fairly long conversation with Mario, who joined me from California's Bay Area. Do stay tuned.
First of all, just to give you some background, when you look at the semiconductor space, it's been very essential to the growth that we're seeing today in AI infrastructure. So the spending has been there now for a couple of years. We've seen it accelerate across the cloud service providers. And now we're starting to see the investment by enterprises and then ultimately sovereign investments as well. So every major nation around the world looking to not be left behind are now beginning to plan to invest in the technology, in the infrastructure to build this out. And you have a company like OpenAI, who is a fairly new company, but they've, of course, have grabbed a lot of the mind share. They're one of the first companies to really start beginning to look at the potential of Gen AI. And they've brought in a very large base of consumers of their platform. And so they are now sort of at the front side of all of this infrastructure, but they can't do it alone. As much valuation as they've gotten as a private company, they need partners to continue to build out what's happening. And this is what you're seeing today. It's been an important driving force for the semiconductor industry as a whole.
Right. So if you were to take a step back in a manner of speaking, how would you define or draw out the landscape in terms of demand and supply of chips? How many chips does the market really need? How much is being produced? Where is it being produced? What are the kinds of chips that are most useful and important in building the kind of AI infrastructure that we're talking about?
So when you look at the semiconductor space, last year in 2024, the total industry was about $680 billion in size. So it's a pretty sizable market. This year, we're expecting the market to grow about 17.6%. So we're looking at an industry now that it's going to be about $800 billion. And over the next couple of years, we're likely going to see $1 trillion in terms of size of the overall semiconductor space, which is about 2 years earlier than consensus, right? A lot of that growth that you're seeing in this industry is really coming down to what we're seeing today in the data center. So the data center just 3 or 4 years ago represented about 15% of all of the demand for silicon. But as we start closing the end of the decade, you're going to see over 40% of the semiconductor industry driven by the data center and the silicon that you're seeing deployed in infrastructure. So it's a very significant movement that we're seeing, and the data center silicon is becoming a very critical part. So that includes things like GPUs from NVIDIA and AMD, but also ASICs from Broadcom and accelerators just across the board. And so far, what we've seen is a lot of the demand has really been centered on training these very large frontier language models. And over time, this same training and reasoning and inferencing is going to move from the data center to the edge. And I think that that will bring in even more opportunity, because despite what people think about the fact that you're going to have to get more power efficient, that's one facet that we're seeing as a trend. But we also believe that the more you're doing inferencing at the endpoints, the more computing you're going to need locally on these devices, whether it's a smartphone or a PC or a wearable. And so we're seeing all of this equipment, all of this hardware being deployed, and that's driving tremendous growth and recovery for the semiconductor industry.
Right. So you said 40% is data centers today.
Now, 40% will be the data center market by 2030. 4 years ago, it was about 15%. Today, I would say it's about 24, 25%. So we're seeing some very rapid growth, and data center is an important driver for the growth in our industry.
And data centers would typically would need or use the highest end of graphic processing units and so on.
Yes, it uses the most dense hardware, and many GPUs and CPUs and also memory are very key. And more so now, as you're building larger and larger systems or GPU clusters, you're also going to need more advanced communications and connectivity. So you're seeing also an explosion of demand for networking topologies and technology to support these very large AI servers in data centers.
Right. Where's the other 75% going today?
Well, a lot of the other markets that support the semiconductor industry continue to be traditional spaces like PCs and smartphones. You look at the automotive industry, the industrial industry, and also consumer electronics. So think of the smart home, think of white goods appliances. All of those devices are consuming a lot more silicon over time. These industries will continue to grow over time because we're seeing silicon in general become more pervasive. And in areas like automotive and industrial, what we're seeing is a movement to more electrification and less motors and so forth and analog. And I think that's what's driving some of the growth in those industries as well.
Right. You said 680 billion in the beginning. So if you were to now split the value between the high performance chips that would be used in data centers or for the kind of AI applications that we've just talked about versus the more conventional, which is, let's say, in appliances or cars and so on, what would that be?
Well, if you look at the most advanced technology that's being used in this space, a lot of it is going to the data center. So that would account for 1/4 of the market today. The other 3/4 are going to be made up of the markets that I just mentioned earlier. If you're looking at it from a manufacturing standpoint, and you look at all the capacity in the industry as a whole, only 20% of the capacity is allocated to advanced technology nodes. So think of TSMC and Samsung and Intel offering technologies that are 7 nanometer and below. And today we're just beginning to see, 3 nanometer in mainstream use, moving to 2 nanometer later this year and going into next year. All of that advanced technology accounts for about 20% of all the capacity. The other 80% is still being allocated primarily to mainstream and mature process technologies that today you can find in any device.
Right. And I'm going to come back to applications in a moment. Walk us through where these chips are now being manufactured predominantly and how do they now flow? As in, where do they go? What are the borders they cross and so on?
So traditionally, the semiconductor industry has been broken up between integrated device manufacturers, companies like Intel and Samsung. And then you have this collection of leading companies that are doing, we call fabless companies. So they design chips, but they use a manufacturer to build them. And then there's the foundry industry as a whole. These are manufacturing service companies like TSMC, UMC, Global Foundries, SMIC in China, Huahuang Group in China. These are companies basically selling services, manufacturing services, and they've become a bigger part of the industry as a whole. So when you look at the most advanced technologies, those are primarily coming from Taiwan and to a certain degree, Korea. Later this year, Intel will be rolling out their 18A process in Fab 22 in Arizona. So we will start seeing some of advanced technology begin to be produced in America. But today, over 90% of the most advanced technology is coming from Southeast Asia and Korea, and primarily from TSMC. So TSMC today controls about 70% of the total foundry industry, and they're driving and growing twice as fast as all the rest of their competition. Now, over time, what I see happening is that you're seeing both TSMC and Samsung continue to invest not only in their home country, but at the same time, they're diversifying into Japan, into Germany, and also into the US. And last year, TSMC began to produce 4 nanometer and 5 nanometer in the US in Arizona. And you can expect that over the coming years, they're going to have a lot more concentration of capacity in North America. And so that's just the advanced technologies. When you look at some of the mainstream and mature technologies, a lot of those technologies today are coming either from China or the US and Europe, but mostly in Asia Pacific. So companies like UMC and Global Foundries and SMIC, they are the biggest players in those spaces, and they serve industries like automotive and industrial and consumer electronics. And over time, even TSMC is also a big player. They control likely about 2/3 of the mature and mainstream process, even though they're the leader on the leading edge. But it's an industry that's growing about 15 to 17%. And the foundry industry is what supports all the major fabless companies that we talked about. So these announcements that NVIDIA and AMD have made and Broadcom is making, these are companies that are large customers of TSMC. And TSMC is an important ingredient company that is really enabling these companies to be able to address the growth that we're seeing in AI infrastructure.
Right. And in terms of both the end use and the destination for all these chips that are being manufactured, how would you split that up geographically today?
Well, the demand side is a lot more evenly split, right? Today, China is still the largest market as a whole, and they control about 1/4 of all the demand for semiconductors. It used to be closer to 30%, but because a lot of the growth is now coming from AI, we've seen a little bit of a down numbers for China, but over time, China will continue to lead the industry as being the largest semiconductor industry. Second would be North America. So in the Americas, of course, PC demand has been pretty healthy, smartphone demand, but the build out of AI infrastructure is what we're seeing today in North America. And it's been basically a land grab. You know, companies like OpenAI and Tropic and others are working very closely with the semiconductor companies to build out the hardware that over time is going to drive a lot of the services and drive the training and inferencing that we want to see across enterprises. If you look at other sectors like Japan and Southeast Asia and Europe, these industries are also heavily driven by automotive, industrial areas, and also consumer electronics.
Right. And if I were to come to the enterprise side of the market, now companies are also heavily investing in AI solutions, agentic AI. We hear a lot of that even here. All of that is obviously calling for more computing capability and computing power. So, where is that coming from today? Where could it come from down the line?
Well, when you look at the enterprises, I think they're just beginning now to experiment with AI. And what's key about this is that AI needs data to be able to train the models, to be able to drive inferencing. And so a lot of that data is still captured by most enterprises. And so when you think about all the training data that ChatGPT has used or Gwen in China or all these different large language models, a lot of that data is coming from public domains and the internet. 80% of the data is still locked in with enterprises. So what we're going to see is basically companies now are recognizing this and they're trying to figure out, how do I monetize the value of the data that I've been capturing for my business and my operations? And so you're starting to see enterprises begin to experiment with AI, looking at ways to improve how they connect closer with customers, how do they collaborate better, but also how to automate a lot more and leveraging data all along those different paths. And so IDC believes that in the next 3 to 4 years, enterprises will spend about 1.5 trillion on IT, hardware, software, and services. But of that number, about 325 billion will be allocated towards building out AI platforms and building out hybrid clouds, because what they're recognizing now is that they'll still continue to use cloud infrastructure from the Amazons and Microsofts and Googles of the world, but they also want to own their own infrastructure. And so this is the deployment and the growth that we're expecting to see in the coming years. And hopefully we'll continue to see the strength that we've seen in the market, and it'll have a positive impact on the semiconductor industry as a whole.
Right. So you're saying that, is this the first time that we are seeing a reversal of that trend in some ways? I mean, compute going from within the enterprise out and now coming back?
I think you're going to see a combination of two. I think we're going to live in a more hybrid world where the cloud is going to have its position, but so will the edge. And I think that when you think about a consumer, the consumer will want to use more AI, but on their devices. They want to make sure that they can trust their devices, that they have the proper security. And you're going to see more inferencing and reasoning done. If you think about what's driving ChatGPT now and what's driving the new Gemini version from Google, a lot of it is consumers now beginning to implement that across their devices. And so I think that you're going to see a hybrid world, and computing will sit not just in the cloud. I think that's where you're going to do the training for the models. That's not going to move away from that, but more of the inferencing and the reasoning and the learning over time will be done with edge infrastructure and also with endpoints. So our devices are going to have a lot more compute. They're going to have a lot more memory, and also newer technologies like neural processing engines in order to be able to do AI in a more performance efficient way. And I think that's where we're seeing the world move to.
If I can contextualize this through the sort of eyes of Wall Street, now almost 25% of the market is really the tech companies, which in turn is linked to AI, which in turn is linked to chips in many ways, though not always. How do you see this panning out from here? Because on the stock side, they clearly, I mean, it is at record highs. Whether it's a frenzy or not, I guess is subjective. But how are you seeing it from your point of view? Because if things turn for whatever reason, then that will affect capital investment, that will affect outlook, and really the way businesses are planning down the line.
IDC does not do valuations of companies, but we do advise financial institutions more on the technology itself and the companies that we track very closely, the management team. So what I'm seeing still is a large amount of commitment to continue to invest until we get to that point where we get to general AI. I still think we're a couple years away from that, but all of these companies are racing towards that. So the only thing that will slow that kind of investment down will be the uncertainty around the policies around trade between the US and China. And the more we see industries lock up and become more insular, I think those are the risks that I think investors need to be concerned about. If you look at the technology itself, it continues to progress. And in fact, whether it's NVIDIA or AMD, these companies are now on an annual cadence in terms of the introduction of the technology that they serve to the market. And so this market will continue to evolve, and it's moving very quickly. And I still feel that we're early in this level of investment. We still have not yet figured out how to create a very sound TCO or justify the business value across this. But you need to build the infrastructure. Just like we built railroad infrastructure in the early 1900s, you're going to have to do the same for AI. And I think it's going to be very transformative across many vertical industries. So I think we're at the beginning, and I think investors are kind of seeing that, but I think there's risk. There's risk around the trade. There's risks around negotiations around trade. And the administration in the US still has some uncertainty around the policies that they're trying to implement. For me, I've always been a believer that the less governments are involved in the industries, the more the industries can continue to drive innovation on their own. You need the public sector more for R&D. And I think we're at a phase now where we're moving beyond the R&D and into commercialization. So I'm more optimistic about it. Of course, you could have some pausing effect in the coming years. I think over the next year and a half or so, you might see a pause by some of the cloud service providers. But at that point in time is where I believe also the enterprises will begin taking off with their own commitments to invest in this space, and also the government sector now. So you're seeing projects like Stargate, maybe not as sizable as that, but you'll see them in China. You'll see these kind of projects in Japan, in Korea, and of course in Europe. And so no one wants to be left behind in AI. And I think this is the land grab that everybody's looking at. And I think investors should be paying close attention to it.
Right. You talked about the role of Asia, including Southeast Asia. You talked about Samsung, TSMC, and China, of course. As you look ahead, if things do not improve in terms of trade relations, and countries like China are obviously incentivized to build their own chips because of trade barriers and so on the US side, how do you see that situation evolving? I mean, could we see new sources of semiconductors? Could innovation shift?
Absolutely. That's inevitable. I think this industry has traditionally been very interconnected. So, you have suppliers working closely with the supply chain across Asia Pacific and vice versa. But I think if we continue to see this disconnect between the US and China, you're going to see new supply chains being formed. We're already seeing some manufacturing move to places like Malaysia and Vietnam and even Singapore, which is a high cost nation. But it's really in search of more talent and also potentially markets that can consume a lot of this technology. So I think India will play an important role in the future. If India can continue to focus on building out the infrastructure and making that available, I think India has a very strong talent, especially over the years, the amount of work that they've done in the IT space, I think some of that will pivot more towards trying to figure out how to impact the design of a lot of this AI hardware and also the applications that will sit on top of the hardware. I think in general, companies will look to find better ways to move up the value stack. And we're seeing it today with semiconductor companies. And what's interesting to point out about that is the fact that for the first time in a very long time that I can remember, and I've been tracking this industry for over 30 years, the semiconductor companies are enjoying gross margins that are very similar to software companies. And if you look closely at semiconductor IP companies like ARM and Rambus and others, they're still generating gross margins of over 90%. And so this is sort of unheard of, but a lot of it is because we're moving to an era where it's not just about chips and packaging, but it's about designing systems within systems. And so the level of knowledge and capability you need to have is going to only escalate in terms of complexity. And so you're going to need the talent pool to be able to take advantage of that. And so I see supply chains will evolve, and you're going to see nations that you didn't think could collaborate will begin to collaborate more and in some ways pull away from the US because they see a bigger opportunity in close collaboration with China and with Southeast Asia. And so Japan will have to make those kind of decisions. Korea will too. And even the European Union will have to do that as well. I do definitely see that evolution will happen, and you're going to see new players come to market because of it.
We saw the US government taking a stake in Intel, something that one could have never imagined, I guess. And Intel itself facing a lot of challenges. That too was, I guess, not really anticipated a few years ago. What does that tell us? I mean, in terms of what has happened and what could happen in the semiconductor industry, just to wrap up.
It tells us quite a few things. And it's a long story that's going to be told for many years. But one of the things that's key is that, it's not new that governments take vested interest in certain industries. We've seen it in oil and gas. We've seen it in build out of infrastructure. And even if you look at the early days of companies like TSMC or Samsung, there's been heavy government involvement from the beginning. That's why they've subsidized and they've been able to take advantage of tax incentives. But there's a point in time where you have to kind of stop at a certain point and allow the company to fend for themselves to survive on their own. And for me, that's the line that I think I'm watching very closely between the US administration and Intel. I think Intel has a tremendous amount of IP and technology, but a lot of it has been missteps around execution and, quite frankly, leadership, a lack of leadership that made decisions many years ago that are affecting the company today. So I do believe that the industry as a whole is coming together, and it does require more intersection with the public sector because a lot of this build out is around infrastructure that's going to benefit the public services that you're going to see. So you're going to see that combination. And I think that the government will benefit from keeping Intel around until they're able to kind of transform and get back on par with their competition. But it's just going to take some time. And the unfortunate truth is that our industry, whether it's AI or the semiconductor industry, is changing so fast that some companies will not be able to survive. And in fact, one of the key things that could have predicted some of this is every time you see a very big shift in architecture is when you start seeing leaders be toppled and eventually you see others emerge. And so that's happened with companies in the past like IBM. It happened to a certain degree with Apple. And then some of these companies were able to bounce back. And I think Intel has a lot of interesting technology that they're going to be able to leverage, and they need focus and they need to make tough choices in order to survive and thrive in the future. But it's an interesting time, and it tells us that as big or small the company might be, or even a government or country, you can't do this alone. It requires a tremendous amount of investment. It requires a lot of technology and also leadership. And I think this is going to be the most important thing across any industry, is going to be who are going to be the leaders that are going to take us forward with some of these interesting and incredible technologies that are in front of us today.
Mario, it's been a pleasure speaking with you. Thank you so much for joining us and sharing your thoughts.
Thank you very much.
That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.